Welcome back. Good Wednesday morning, everybody. Thanks so much for joining us this morning. I'm Maria Bartiromo, and it is Wednesday, May 6th. It is 7 a.m. on the button on the East Coast. Stocks are soaring this morning as oil prices plummet. Take a look at futures. The Dow Industrial is expected to be up almost 600 points at the opening of trading this morning, better than 1%. The S&P 500 and the Nasdaq are trading further in record territory this morning after hitting new highs at the close yesterday. The S&P up 72, about 1%, and the Nasdaq is up 460 right now. That's 1 2/3% as big tech leads the moves. Oil prices, meanwhile, are plummeting. Take a look at the price of oil right now, down better than 12%. Crude oil just dropped below $90 a barrel, sitting at a level of $89.94, as Axios is reporting that the U.S. and Iran are moving closer to an agreement. There is a memorandum of understanding underway to end the conflict. President Trump has paused his Project Freedom. That's the effort to guide ships through the Strait of Hormuz. But he did say that the blockade remains in place. Joining me now is White House National Economic Council Director Kevin Hassett. Kevin, it's great to have you this morning. Welcome.
Good to be here. Yep.
What can you tell us about the Iran war and the impact on the backdrop here as these markets are soaring this morning?
Right. Well, basically what happened was that the president showed with his resolve that we were willing to start escorting ships through. And I think that that was maybe the thing that pushed the Iranians one step closer to making a deal. I can tell you that I was walking around in and out of the building yesterday, seeing a lot of action in the Situation Room with negotiators, and it looked like the mood was high. It looked like the mood was high. That we'll have to see what happens. You never know with the Iranians, but absolutely, it looks like the folks that are negotiating these things seem to be feeling like they're making a lot of progress right now.
And the president has been saying, look, I think this is close to over now for a couple of weeks. He told me in that interview just 2.5 weeks ago. But Kevin, this is also happening with a backdrop of a very strong earnings period. Walk us through what you believe were the most important, issues in the big beautiful bill that has created this environment and this backdrop that has this market reacting to a strong earnings period as well.
You know, one of the things that's really visible in the data is that the corporate side of the big beautiful bill is working as well as we could have ever imagined. And so business capital spending is booming in the U.S. in a way that I honestly, as you know, Maria, I've been following this since as long as you and I knew each other was in the early 90s, I think. And like we just had a March non-defense capital goods order number that was 3.3%, not at an annual rate. We've got capital spending booming, but we've also got all these announcements of foreign multinationals doing groundbreakings in the U.S. I added up more than 100 billion of them when I was giving a talk yesterday of companies like Novartis, who are and TSMC, who are building big $100 billion plants here in the U.S. Because we're the hot place to be right now. And so I think that Americans are seeing these earnings go up, but the earnings are actually an understatement of how good it is, because those earnings, subtract the cost of the new investments, which are going to give us even more earnings down the road. The bottom line is that there's an AI productivity boom, which is feeding through to an earnings boom, and multiples aren't really that scary at all, even though the market's skyrocketing. And so I think there's a lot more room for everything to go up.
Yeah, I mean, we're talking about the full expensing for equipment, factories, R&D. You're talking about restoring the 100% bonus depreciation, which people talk about. That expanded Section 179 expensing and revived write-offs for domestic research costs. That's the business end of it. But when I spoke with Treasury Secretary Scott Bessent on Sunday, he also talked about what consumers are doing, and he gets that from the most recent tax day data. Watch this.
Maria, 45% of filers during this tax season availed themselves of at least one of those programs. So we had record refunds, and because of the modernization at the IRS, if you filed electronically, we were able to get your refund out in 21 days. So the consumer's very strong. Another aspect of the tax bill is the permanence of full expensing. So companies are coming whether it's equipment, factory structures, they are able to write that off in a year. So we're seeing a CapEx boom. The way a CapEx boom works is you have a construction boom that then morphs into factory jobs. So that's very strong. And again, the consumer is very strong. We're in constant touch with the banks and the credit card companies, and they're saying that all quintiles of the distribution group is very strong.
So Kevin, what kind of a jobs picture are you expecting for the rest of the year then?
Oh, it's going to be very, very strong. And you know, I agree with what the secretary said, but want to add a little color to it, that about 25 million people benefited from no tax on tips. The average benefit was $7,000. About 25 million people benefited from no tax on Social Security. That also was about a $7,000 benefit. They get to deduct $7,000. And so the consumer is really, really firing on all cylinders, just like the corporate sector you're seeing in the earnings reports. And they're doing that because they have so much more money in their pockets. In fact, I had the head of one of the big 5 banks in my office yesterday going through the credit card data. And just as Secretary Bessent said, credit card spending is through the roof. They're spending more on gasoline, but they're spending more on everything else too. And so in terms of the jobs picture for the rest of the year, you know, it's really hard to see having the unemployment rate go up, for example. It's probably going to drop a little bit, but it's already very close to full employment. But I think a very healthy, steady jobs picture is what we're going to see. And finally, what you might have noticed about a week ago is that nobody's really losing their job. Nobody's being fired. Initial claims for unemployment insurance were the lowest they've been since the 1960s. One of the lowest numbers is below 200,000, one of the lowest numbers I've ever seen. Just like we get the highest capital spending numbers we've ever seen, we've got the lowest initial claims data for unemployment insurance data as well. So that's what you call a strong economy.
Now, we spoke with the president of Meta recently, Dina McCormick Powell, and she said that there will be a need for 500,000 electricians. So when you look at where the jobs are coming from, what sectors would you say will offer the most opportunities, given all the money going into the data center build-out, Kevin?
Right. Well, anybody who works at a factory is going to see a huge increase in the demand for their labor as the factories get set up. And it's happening in Trump time. You know, one of the most brilliant things that President Trump did, and he was 100% the guy, I was in the Oval when he said this, is that let's not have expensing for new factory buildings go on forever. Let's have it last for only 4 years. And so right now, if you want to get your full tax benefit, if you're building a new factory to create jobs in anybody's small town, then that factory has to be up and running in 4 years. Otherwise, they don't get the big deduction. And so there's a race, unlike anything we've ever seen, to create jobs in America right now. And since President Trump signed that pledge, 54,000 jobs have been created for construction workers for building factories. 54,000. They're out there working as hard as they can, and then once they get the building up, the bricks and everything, the bricks and mortar, then they have to put in electric, they got to put in plumbing, and so on. And so I think that the trades are definitely going to be in very, very high demand. But the very, very skilled higher-end workers that are like the engineers who are designing the things, they'll be in demand as well. But so this is not like a K-shaped recovery. This is something that's going to affect everybody.
Very good. Now, Kevin Warsh is expected to come in and get confirmed next week. Are you expecting him to be confirmed next week, and that Jay Powell will, in fact, step down as chairman by May 15th?
Well, we're highly confident that the president's pick, Kevin Warsh, who's just a fantastic pick, is going to be the next Fed chair next week. What happens with Jay Powell is still a little bit uncertain, but I think that Jay, once he gets in, helps Kevin get oriented, and then thinks through what's going on with his own IG's investigation. It's not like we're threatening the independence of the Fed. It's the Fed itself is investigating itself. That doesn't really seem like a thing that should be objectionable. And so I think that he'll listen to reason and eventually step down sometime soon.
Yeah, I mean, he said he's going to become a governor on the board. And, you know, even, you know, the Treasury Secretary told me that it's like looking over Kevin Warsh's shoulder there, overshadowing.
It's very awkward. It's very awkward. I can't imagine he'll find that an attractive place to be very long.
So Kevin, let me ask you a little about AI. I know this is an issue that you've been looking at, and the president has been looking at, and the Treasury Secretary brought together the major banks and the AI companies recently because of a breach in Anthropic model. And I want to get your take on the significance of this. Should we be worried that this is a systemic systemic issue, cybersecurity concerns around the Mythos model?
Well, cybersecurity is always something that people have to pay close attention to. The good news is that throughout America, even ordinary folks with their computers at home has invested a lot in cybersecurity. The Mythos model makes it so that vulnerabilities that we didn't know existed before could potentially be found with this more powerful tool, but we have scrambled on all government effort and all the private sector to coordinate and to make sure that before this model is released out into the wild, that it's been tested left and right to make sure that it doesn't cause any harm to the American businesses or the American government. And so I'm highly confident that the National Cyber Director and his team are moving this forward in a way that will help it be released at the right time to the public. In addition, there's a couple more things that we're doing. We're studying possibly an executive order to give a clear roadmap to everybody about how this is going to go and how future AIs that also potentially create vulnerabilities should go through a process so that they're released in the wild after they've been proven safe, just like an FDA drug. And so I think that that Mythos is the first of them, but it's incumbent on us to build a system so that AI can be the leader of AI, U.S. AI can be, and be safe at the same time. And that's really pretty much what we're working almost full time on right now.
That's incredible, Kevin. I mean, because you would imagine that if we see questions and vulnerabilities around the Mythos model, then OpenAI is next. Gemini from Google is after that. I mean, won't we see this in other models as well?
It's really quite likely that because what these models are very, very good at is computer coding. And so what maybe people 25 years ago weren't so good at is computer coding. And so if you get like the best computer coder ever looking at the code we wrote 25 years ago, then they're going to find things that are problematic or at least could be improved. And so that's where we are right now. But I can tell you that, I'm meeting with the big banks, as Secretary Hassett is today, to catch up on the progress that they're making, and it's really promising.
Yeah, it's promising because it's an area where, we don't understand as well as we need to. We need to understand where the vulnerabilities, because if you see this, trickle down to people's worrying about whether their money is safe in the bank account, then you are talking about a systemic issue.
Right. Well, their money right now is safe. It's being made even safer. In some sense, the way to think about it is you've got like the best ever security firm looking at all your software, finding things that could be vulnerabilities if somebody had 1,000,000 years to search through your code, and fixing them before that person has a chance to hack your systems. And so in some sense, even like every day, the U.S. code is getting more secure because of the efforts that we're making.
Yeah, and thank you for that. That was a great explainer in terms of what is underway here. Do you worry about the private credit issue that so many are talking about in the economy? And I know the SEC is investigating potential fraud in the private credit market over rising default risks and redemptions. Paul Atkins said that they're closely monitoring the space, and the Treasury and the Federal Reserve as well, with multiple cases under review. What can you tell us about that? Michael Barr, the Fed governor, warned that stress could spread beyond private credit. Is this something that you're focused on?
Well, of course, we focus on anything that could potentially, be of interest to those who worry about systemic risk. But for the private credit corner of the economy, we don't think that it rises to the level of being something that, the FSOC needs to get together and talk about what are we going to do about this thing that might cause a financial crisis. And it comes that way for a very simple reason. First of all, that they have assets that are still liquid and marketable. Second, if people are frustrated with the management of their private equity firm, they can take their money out. But the way the firms are structured, you can only take your money out a little bit at a time. They did that specifically so that the private credit industry wouldn't start to cause runs. And so if you can only take a little bit out at a time, like 3-5% a month, then it takes a long, long time for there to be a run on the bank like we've seen like in the 2008 crisis. And so I think that the structure of the private credit had a keen eye on systemic risk when they designed the structure that they have. And so even though some folks might be disappointed in their returns, I don't think that people who aren't in private credit should worry that that's going to overflow into the rest of the marketplace.
All right. Kevin, as we wrap up here, let me get your take on what kind of growth you're expecting for the year. We are here in earnings season, and we've been talking about this market reaction today to a very strong possibility that we are looking at an understanding between Iran and the U.S. Once we are out of this, and the war is in hindsight, what kind of economic growth number would you expect for the year?
I'm absolutely, and you know me, I go for the numbers that I believe are true. I'm not spinning anybody at the White House. I'm highly confident that we're going to be looking at 4% numbers for the rest of the year. And the way to think about it is we just got a 2% number out of the latest GDP release, but it was all capital spending, and a lot of that was capital spending imports. The imports were the highest quality imports we've ever seen in the data. It used to be that we were bringing in, you know, stuffed animals from China. Now we're building in things that make chips. And so all of those machines that we imported in the quarter are going to be turning on in factories and creating jobs for the rest of the year. And so with productivity growth from AI growing at 2.5%, 3%, with capital deepening growing 1.5%, labor supply being solid and above that, but not as big as it's ever been, it's easy to see that growth is going to be in the fours for the rest of the year. In fact, you know, I personally would make a bet on it with my friends.
All right, Kevin, I like those numbers. Great to talk with you this morning, sir. Thanks so much.
Great to talk with you, Maria.
All right, we'll see you soon. Kevin Hassett at the White House. We'll be right back.